Hi, I'm Ed Baldwin with your weekly wrap-up for Friday, December the 2nd. Well, it was a wild week for the markets, with lots of outside news pushing them in both directions. Corn and wheat, though, couldn't shake off the Black Sea shipping agreement being extended out to March. And soybeans, they were up and down, with Argentina devaluing their dollar to increase the soybean exports in an effort to raise cash for their government. The bean oil, well, it was down hard after U.S. disappointed the biofuel industry with lower than expected blending requirements. Yet, canola found new life after being down 8 days in a row. Our January canola contract was up this week, $36.40 a ton, and closed out at $849.30. The canola turned up this week, but in a very volatile trade, being whipsawed back and forth before settling higher for the week on a friendly Stats Canada report, which estimated this year's production at 18.2 million tons, down nearly 1 million tons from their previous estimate. The January soybean contract was up marginally. It was up 3 cents for the week, and it closed at $14.39. The March corn contract, though it was down, it lost 25 cents a bushel this week, and it closed at $6.46. The March oats contract was down as well. It was down 26 cents for the week and closed out at $3.58, where the March Minneapolis spring wheat contract lost 29 cents this week and closed at $9.21. The wheats were down again this week, with cheaper Russian wheat, a dismal U.S. export sales report, technical selling, and outside market pressures all coming together to push wheat prices lower. Our Canadian dollar slipped a little bit this week as well, down just over half a cent. It was down 57 basis points and closed at 74.18. Crude oil, it did manage a gain this week. It gained back $3.69 a barrel to close at 79.97. For next week, well, Stats Canada did provide a little good news when they lowered both wheat and canola production estimates from their September estimate in today's report. So, for canola, we'll look for the recent lows in that $800 area to provide some underlying support, and we'll look for prices to work their way back into that $860 to $880 area. Now, while Stats Canada did lower the wheat production, it is still relatively high. The Chicago wheat did pull back to a 3-month low, and we'll look for that market to try and stabilize there, while Kansas and Minneapolis could still leak a little bit lower as the market search for a bottom. We'll look for spring wheat to continue to hold in that 930 area and to work its way back up towards the 940, 950 range. I'm Ed Baldwin with your weekly wrap-up for Friday, December the 2nd.